So in this session, we'll hear from Salman, Head of Alternative Solutions and Sustainability for APAC in Wealth Management and APAC Sustainability Leader for Credit Suisse, Eugenia, Global Head and Sustainable Finance for Sustainable Finance at Standard Chartered Bank, and Eun Lee, MD, Head of Sustainable and Impact Investments for Asia from LGT Bank, as we look at trends and outlook of sustainable investing and discuss how asset managers can continue to deliver value to clients and the talent that is required to support growth. The discussion will be moderated by Nick Higgs, Director of Market Development in Asia from Kaplan Professional Australia, and he's also associated with IFPAS. So during the session, please feel free to pop any questions you have into the Q&A panel, and we'll address these live during the session. So without further ado, I'll now invite Nick and the panel on screen.
Thank you, Florence, and good morning, everybody. Delighted to be here as part of day 2 for the IBF Sustainable Finance Forum. Thank you for joining us on Zoom and also through the live stream. And delighted to have 3 industry leaders with me. Eugenia, good morning.
Hi, good morning, everyone.
And Salman, welcome.
Good morning, Nick. Hello, everyone.
And En, delighted to have you with us.
Great to be here. Good morning, everyone.
So you've heard from Florence the background and what our panelists currently do. But by way of introduction, I know that people are naturally curious as to how our panel actually got to doing the roles that they're currently in. And so what we could start the show with is to ask each of you just perhaps 2 minutes to give some background, some context into how you stepped into the role that you've got. And it will set the platform for our discussion today on chasing alpha, which we want to expand not just around alpha in the traditional sense of portfolios and asset managers, but maybe drill down into some of your thoughts as to value creation when it comes to sustainable investing. And then also lay the platform for how we can talk to some of the skill sets and mindsets. So Eugenia, perhaps we could start with you. Maybe just a quick 2-minute intro, please.
Yeah, sure. So hi, everyone. I'm Eugenia from Standard Chartered. And I guess I literally fell first into banking and then into sustainable finance. So I started actually in PR and advertising, right? An industry that's completely different. But got into CSR with a financial institution, look at grant making, eventually moved into banking, looking at really comms and, the broader kind of community agenda. But eventually pivoting then into sustainable finance. It was actually when I did CSR that I was first introduced to the concept of impact investing. And I think on a personal level, I was very interested in community development. I had built a social enterprise. So I guess it was a merging of many skill sets and passions that eventually got me to where I am in my role today.
Thank you. We might have to explore that a bit further. Salman, your introduction, please.
Yeah, I'm Salman Shah. I'm heading the Sustainability for Wealth Management APAC at Credit Suisse. I have a bit of a longer journey, and I don't want to discourage anyone. I have over 2 decades experience in the industry, and it took me quite some time to get where I wanted to be. The good thing is, of course, now there are many more opportunities within sustainability, but maybe just a little bit of my background. I'm originally from Pakistan. That's where I was born. And that's where I spent my early childhood. But then I moved to a completely different country and a completely different setup, which was in Switzerland. And then that's where most of my brought up and education was. So you can imagine the deep difference between the 2 countries. It was from very early stage that I wanted to do something for my country. And the initial years were actually in my it was part of the hedge funds industry and private equity. That's most of my experience. And my concept initially was more to maximize on the income, so I can make a personal contribution back in Pakistan and have a tangible outcome out of that. Then over years, I think the industry, which is a great thing and great that we are also all discussing, that has developed to the point where I think the issue we're facing today have to be tackled across all industry, and then the finance industry is actually quite in front of that. And I think nowadays we have many opportunities within this space, and that's when I was offered to take over on sustainability. And of course, I did not have to think too much, and I'm glad that I could pay this part also within my job and not only privately.
Very personal journey there, Salman. Thank you for sharing. We'll explore that a bit further. And Ed, a little bit of background on you, please.
Sure, Nick. Like fellow panelists, I've had a pretty interesting career path as well. I spent, I'm Singaporean. I spent 22 years overseas, and that took me from law to investment banking. And I actually took a year out as a travel editor. I love nature and love photography, and it's really that travel editing year, the gap year, that really sort of let me think very deeply about, my personal values and trying to walk them professionally. And that's really what brought me to the impact investing space 12 years ago, because I'm still a fervent believer that finance has a really transformative power. Unfortunately, not all of that power is used well in the way that we balance the needs of society and environment. And impact investing is just something that I passionately believe in, that can drive the dual objectives of creating profit at the same time having a strong social environmental impact that comes out of it. So that's what brought me to space. I've been in the space, I think, 12 years now. So I'm excited to be here to share some of my thoughts and with other fellow panelists.
Well, thank you. So, ladies and gentlemen listening in today, three very different starting points, three different journeys to lead us to this overarching theme of sustainable finance, impact investing. And so we're going to ask our panelists to share some insights into this broad objective of value creation, and then, thinking about the big picture, some of the challenges, opportunities, and then the career development, which I think is close to what most people here want to talk about. But let's put that decision in your hands. Florence, we have a poll which we could have online. And so for everyone joining us, you've heard we've got the next 50 or so minutes with three industry leaders. And so we have three broad topics to explore, but we're going to put the decision where we spend the most amount of time in your hands. So if I could ask you to state your preference, please. Do you want Eugenia, Salman, and to talk about the big picture, trends, opportunities, and challenges? Would you like them to lift the bonnet and share some practical examples and case studies of the projects that they're involved in? Or should we get to the heart of the matter? How do we carve your career journey so we can put them under the spotlight a bit more? So we'll close the poll in 3, 2, 1. Thank you, Florence. And we have some results. There we are. Majority want us to spend the most amount of time in the third option, but it's pretty evenly split. So I think we should use this as a stepping stone. So how about we start with the big picture? There is, I think, a lot of some confusion around this concept of sustainable finance. So, Em, maybe we'll ask you just to frame the discussion for us and perhaps demystify some of what we're talking to today, please.
Sounds good, Nick. I'm conscious of the poll question that a lot of you on the call today, and great to connect with you virtually, are looking sort of for a career path here. And I think against that background, I thought it might be useful sort of to frame out the sustainable investing and sustainable finance universe, and to talk a little bit about the different types of that spectrum, because I think it does flow down to when you want to apply for a job pragmatically, what type of skill sets do you need to have? So I think starting with, sustainable investing, it's good to say that it's a wide spectrum of approaches. And one way I was sharing with the fellow panelists is that I like to simplify by adding yet another acronym, but the acronym hopefully would help simplify the others, and it's called the ABCs. And generally, sustainable investing are investment approaches that try to look at the future value of things, right? And we try to do that across a spectrum, and that can be sort of categorized into 3 sets of motivations. The first set is A, which is avoiding the harm. So taking out the bad. So no sin industries, no tobacco, no alcohol, no ammunitions, and so forth. So that's kind of broadly one type of approach. The next is B, which is benefiting stakeholders. And I think Salman talked about it a little bit in his introduction, that capitalism has shifted from what is generally known as shareholder primacy, that means doing everything just for the profit of shareholders, towards stakeholder capitalism. And when you think about your stakeholders, they can include your employees, your suppliers, your customers. And one great way to sort of ensure that they benefiting stakeholders, is to apply an ESG framework, right? Because you're looking at the environmental footprint of the company, you're looking at the societal footprint, how do they treat their customers, how do they treat their employees, all the way to the governance of that business. Okay, so the ESG framework is really in the B section, which is primarily driven by ensuring that you benefit stakeholders. And the third one, which I'm most passionate about, is the C, which is contributing solutions. So it's not just good enough for us to remove the harm and ensure that our stakeholders are getting, positively treated, but it's important to ensure that you're actually fixing the challenges that the world faces today. And this can range all the way from healthcare, education, sustainable food and agriculture, resource efficiency, decarbonization. So there's a whole spectrum of that. But ultimately in the C category, which is where impact investors like myself focus on, we're trying to ultimately fund a solution that scales. And that's sort of the ABCs. Now, the second thing I wanted to leave you all with here today as well is, in addition to the different approaches, there are different markets. A lot of times that when you see ESG being used, especially in the last couple of years where the stock markets have been very volatile and also very active, is they're using it in the public market. So when you're trading with public securities like stocks, bonds, ETF, and funds, right? At the same time, where I spend most of my time that I'll explain later, is in the private markets. And typically in the private markets, it can include private debt, where you're giving loans to companies and businesses, all the way to private equity that includes venture capital, where you're essentially taking ownership stakes in companies that are not listed. Okay, so that also has a direct bearing on where you want to find a role in this space. And we'll go to that later, but I'll probably leave you there, and hopefully that gives you a broad overview of the sector.
And great summary there. Eugenia, I might go to you from a global perspective. So through your lens, can you add to that?
Yeah, sure. So I guess Ern talked a lot about the sustainable investing area of opportunities. I'll just complement it with some of the broader sustainable finance opportunities globally. So I think one is risk management. So in addition to just, investing, if you're in the risk and compliance space, actually, that's a huge area across banks. More and more of the risk and compliance teams need to look at ESG type issues, reputational and sustainability risk. So that's one potential area. The other is around the concept of net zero, as a lot of banks and corporates actually are making commitments around net zero. Actually, there is a need for teams to be looking at how they can look at, for instance, baselining their carbon emissions. So my team is involved in a lot of work around looking at some of the mortgage emissions that we have as a bank globally on the consumer side, and to come up with what the baseline is so that we can look at target setting. And for that, the skill sets might again be completely different. It may not be so much of a finance investment skill sets, but around modeling, around being able to put together kind of analytics and assumptions. So really a broad range. I think it really, when people think about sustainable finance, it's not homogeneous. You need to think about what area you're passionate about, what your strengths are, and I think that's a good point then to start navigating from.
Thank you, Eugenia. Salman, perspective from you, please.
Yeah, maybe to add actually, and I think both of you put it very beautiful, both from the investment side and from the financing side as well. I think maybe just an angle that then we use as well, and again the ABC, I love it because it's very easy to remember. I know it's another acronym, but it's a very well put it. And actually our approach to build also client portfolio is very similar to those that are interested in sustainable investment. I think the first thing you need to do, or you should aim to, is to actually avoid harm. Right, and that's the exclusion that Dan also was talking about, either value-based or norm-based, right? So you don't want to have like bad companies doing bad or harm to the world. So that's the first part. The second part is actually from a risk perspective, you should integrate ESG again, because even if you don't believe in it, and even if you don't, there is a concrete risk that the companies are facing if they don't align or they don't look into these aspects as well. And then the third part is what I mentioned in terms of like more on impact investing or thematic investing. So that's more where you can go in specific teams where you feel very strongly about, and you want to align basically your values to the investments and to contribute to specific teams, which can be also well summarized within the UN Sustainable Development Goals as well.
Salman, let's stay with you to talk about some of the challenges for this sector. Em started with this thing about values, understanding motivators and drivers of the people involved. But if we could ask you to talk about the challenges for sustainable finance broadly.
Yeah. I think, one, and then for most, I think it's there is no common, I would say common language. And we saw already with some of the acronym, we saw some of like frameworks and so on. I think everyone is trying to do their best, but there is no, like what we categorize as sustainable might be different than another entity, and so on. It doesn't mean any of them is wrong. It's just that they will have a different type of framework. So I think one of the biggest challenge, and I guess that's also from the investor to try to understand that. And I think, again, there is no right and wrong. It's more about understanding how the manager think about sustainability, how they think about investments, and whether that's aligned with the investor. And just a simple example here, I think you can one thing is you can invest in fully sustainable portfolios, right? And that's good as well. Or maybe what you can do, actually, you can invest in companies that are not fully sustainable, but really engage with them and actually make them sustainable, right? So when you invest in that portfolio, of course, there's going to be a portion of those companies that are not sustainable yet. So again, it's about transparency, and it's about actually what you as an investor would like to achieve through your investments, and that has to be clear. And I think that's what is important within the industry.
Thank you. Eugenia, you're well placed with your engagement, CSR, marketing background to tackle some of those challenges front on. How do you see the challenges?
Yeah, I guess I agree with Salman. I think, one big challenge is that investors really are quite confused. First, there is a lot of jargon in the space. There isn't yet enough standards. And to add on to it, there are different approaches to sustainable investing, right? And to Salman's point, investors might go in looking at, let's say, an ESG fund, thinking that it's a very pure fund, and they might be surprised when they find, perhaps oil and gas companies within that, even though those could be within the mandate because they are part of the transition and they are leaders leading the transition. So I think one big thing that we're really focused on is on how we can simplify and also make it clear for investors. As someone said, transparency is key. And being able to just help make things basic and simple, I think is a good starting point. And we know that for investors, the moment there's too much complexity, they just shy away from it because there's just too much to grapple with. But I would say that amidst all of the challenges that we currently face, I do still have high conviction that it is a space that is worth looking at. From my journey when I looked at grant making and also been involved in building a social enterprise, I know for sure that capitalism and being able to channel and harness finance for building development sustainability is really one of the most sustainable ways forward. And I think it's a great opportunity for investors to kind of play into that as well.
We are all about positivity this morning, so we'll get to the really good concrete examples. But Em, from your perspective, a comment on the challenges that we face.
Yeah, no, I definitely agree with what Eugenia and Salman said about the challenges, lack of transparency, fragmented market, lack of comparability, having subjectivity and impact and what's sustainable. So they're all there, but I agree with Eugenia that the outlook, especially for Asia, is very optimistic. I do believe that, we're super well positioned in Asia to drive that greater capital flows into sustainable investing and finance, simply because we live at a very unusual time where you've got these biggest challenges that you can no longer ignore. All of them are essentially related to ESG, right? So take Salman's point that you're doing it for risk, but you're also doing it for upside. And we're at a really interesting point in Asia where you've got the biggest growth out here, really attractive demographics, but at the same time, the intersection of the biggest wealth together in the same place as the biggest challenges, right? So that's something very, very special for this time for Asia. And I think for those of you that, since so much of it's career focused, I think I probably change a challenge to an opportunity, which is that as the space is getting mature now, and I've been there for 12 years, like I think many of my panelists have been here for at least a decade, and we're starting to see a real skill set shift. So for example, who's not talking about decarbonization? We know it's one of the biggest things, or who's not talking about climate crisis? And the two are interlinked, but having the skill sets to understand carbon in the supply chain, carbon technologies from carbon capture, utilization, storage, and so forth, green hydrogen, all of that. And I absolutely agree with Salman's point that it can't just be focused on what's green today. In Asia and the rest of the world, we need to think about how we move the brown to green, right? Brown to green, meaning taking some carbon intensive industries that are not generating as much positive impact as they should, but shifting that to the right side of that spectrum. And it takes a lot of technical expertise to do that. So I strongly encourage everyone, as part of the challenge that we're developing the market, that the opportunity is double down on the technical skill sets required for that. So if you're passionate about climate, or you're passionate about water, you're passionate about healthcare, you're passionate about carbon, that's really an opportunity to carve out technical expertise to help mature and develop the sector.
People might naturally go to the term greenwashing from what you've all said. Can we put that on the table out in the open and just have a quick comment on the concept of greenwashing? And we'll stay with you, please.
Sure. So I think it comes by many terms, right? Some people call it greenwashing, some people call it impact washing. I've recently heard rainbow washing, which refers to the SDGs, because the 17 SDGs are so colorful. Lots of people put it on their deck. When I ask them, oh, you like SDG 3 on healthcare, are you concerned with maternal or child health? They'll be like, what do you mean? Okay. So I think generally with these impact or greenwashing risk, we're talking about the risk of false or unsubstantiated claims and outcomes caused in social and environmental impact. Okay, that's where the washing is. And I think, obviously it exists with any industry that's probably going on a hype cycle. And to some extent, there's a little bit of that in our space. But I think how we as investors try to hedge against that risk is we spend a lot of time in due diligence, getting to know the companies that we invest in, the teams, the co-funders that we work with. And it really comes down to two core things. One is intentionality and the other one is authenticity, okay? Intentionality is very, very important in the definition of impact investing, because you need to, in the investment approach, the way that you create value, as you mentioned, Nick, all the way to the way you exit a business, it needs to have that positive social environmental impact built into the DNA of that investment. At the same time, the team authentically needs to want to generate that alpha. And since this panel is called Alpha, we're trying to, in the impact investment at least, generate the impact alpha alongside the financial alpha. And that's one really great way to ensure that their processes, the team's ideology, their value system, their culture, all the way down to the investee and how they operate, that it's hot-wired into the process and the way that they operate. And the real special thing about trying to avoid green or impact washing is to try to find business models and teams that are aligned with that value creation. And at the same time, the business models, they align with that impact alpha and that financial alpha. So it's not easy, but that's one way to sort of spot the winners from the ones that try to wash.
Thank you. Salman, how do you manage this in your role?
Yeah, I think, look, as Anne mentioned, in terms of of course, from our end, it's really trying to understand, as Anne mentioned, any investment that we provide on our platform, that it's labor sustainable. that we do our job on the back end, and then the client understand how our framework works and how we analyze those companies or investments. But what I want you to say as well, in addition to that, I think, of course, it's a new industry and there is a hype, and of course, I think it's important there is scrutiny. So I think that's it's shaping in the right direction. However, I think we should also be very mindful that there are a lot of companies, there are a lot of entities that are doing extremely good job, and they're doing like a very interesting projects that are gonna actually help the planet and help the investors. So we should also not discourage some of the actually people that are within this industry, and they are genuinely trying to do their effort into this space. So while again the industry is growing, you need to have much more scrutiny to make sure that it's going to the right direction. At the same time, you don't also want to discourage actually genuine people and to enter into this space and actually to make that impact. And as again briefly we mentioned before as well, right? I mean, I know sometimes it can be a little bit controversial having some names in your portfolio, but again, as I mentioned, if the intention is really to help them to transit, it's again what your intention to do with those companies, I think that's even more impactful than just investing in a green portfolio. Right. So again, we just need to educate, and we just need to kind of, and I think again, this forum and everything that is happening nowadays, it's extremely helpful to really create more awareness.
Intentionality, authenticity seem to be some common themes here. Eugenia, a question from our audience, and I do encourage everybody, you've got access to 3 industry leaders here, so put them under the spotlight with your questions. Let's link this to transparency and the usage of proxy data to assess ESG. Eugenia, did you want to take that one?
Yeah, sure, I can. So look, I think, the data space is definitely one that continues to evolve. And you're right that, it's not perfect yet. There are a number of data gaps. I think in some areas where there is a lack of data, we do think that it is reasonable to use proxies, but those proxies and the assumptions behind them and how they're generated, there needs to be looked further into. So we need to be comfortable as to how those proxies have come about before we make a decision of whether to go with those proxy data.
Thank you. We might use this as a stepping stone to get to what our audience wants to hear, which is around career paths and skill sets and mindsets. But a great question from Lynette, and I'll ask this question to all of you to think about a practical example or case study that you are currently working in your team. So we'll start with you, En. Lynette's question is around what do you see the green and ESG opportunities for insurance in retail other than healthcare, which you mentioned before. So I'll get you to talk about maybe your perspective from LGT and the private bank.
Well, Nick, you gave me the easy question, huh?
We'll come back to the hard ones.
No, Lynette, thanks so much for that question. It's a great question. It's not an easy one to answer. I guess, where insurance is coming in, I mean, what's really the elephant in the room is that we're living in several intersection of several sort of crises, right? From the pandemic to the climate crisis, and now carbon as well. So I think, when you put that all together, the practical implication of the outcomes that you're trying to avoid are some of the physical and the transition risk that come with that transition. And I think insurance has a really critical part to play for that. So I don't know whether you're talking specifically about any particular sector, but even take the fact that Singapore is an island. Most of the cities are coastal cities. If you've got Indonesia, you've got 17,000 islands, Philippines, 7,000 islands. And just think about the water risk that comes at the inflection point of climate and carbon. Okay, sea level rises can create a lot of challenges. So I think the point I'm trying to make with a very clear example is that insurance is a very powerful sector that has a key role to play in this. So that's just on the environment side, on the green side, as you mentioned. But I also want to bring in the idea of the societal side. And a large part of that, whether it's healthcare or access to finance, comes from microinsurance, right? Packaging affordable insurance for essentially emerging markets. And obviously, like I said, I don't need to outline the case for Southeast Asia, India, or China. but one only needs to look at some impact funds like Leapfrog, which started entirely from microinsurance, to see how they've grown. So I think hopefully that answers your questions, and with two clear case studies, both on the societal aspects of insurance as well as the environmental ones.
Thank you. Eugenia, could we lift the bonnet on, an example from your perspective, please?
Yeah, sure. So I think, if you think about the product innovation space, what we're starting to see is that there is a mainstreaming of ESG even within insurance products. And it's something that we have been discussing with some of our insurance partners to look at, ESG type solutions for bank assurance, where the insurer's wrapper would be aligned to certain ESG outcomes, and with an underlying within the ILP being kind of some of these sustainable investments, be it sustainable ETFs, that could then help any client from a retail perspective get involved in buying some of these sustainable insurance products. So I would say that the insurance industry is starting to think about that, and we will be seeing more of such innovation coming out from a product development point of view.
Thank you. Salman, an example or practical case study?
Yeah, maybe I relate to actually what Anne mentioned. I think it's on the ocean health, and I think that's, again, it's a reality that's very close to all of us, since we do live in an island as well. Something that it's been quite at core for CS as well, and we've been looking in terms of like how we can actually help, because again, I mean, the ocean offer a huge amount of opportunities. At the same time, it's health, it's a danger, as we all know. We know there are more than 12 million tons of plastics that are thrown into the ocean every year, and there's, just to put things in a little bit more visual, I mean, that's one garbage truck dumping plastic in the ocean every single day, right? So that's how bad the whole situation is, and what we did in this space, it's in addition to, of course, our own in terms of awareness, in terms of research paper, in terms of like organizing conferences around this topic. We also realized that actually a lot of institutional investors are looking to invest into this space or actually do something, but there are limited investments vehicles that allow investors to actually participate in this, in this, I would say, both challenge and opportunity. And that's where we partner with an external manager with over 40 years of engagement into the ocean strategy, which is something very difficult to build from day one. And which also partner with a NGO that is extremely knowledgeable into this space, and the strategy basically invest into companies, and as mentioned also before, and that's the reason why I'm quite eager on the engagement part. They really invest into those companies that are really trying to transit actually into a greener business, which is going to safeguard the ocean life, and again, it's a value add that actually the company together with this NGO can provide to those individual companies as well, that is going to literally touch their business line, and at the end of the day, it's going to allow investors to participate into this strategy, and again, the impact that you are creating on the ocean side that hopefully is going to benefit all of us.
We certainly hope so. Let's build on this this topic. There's a question here which might require some diplomacy. It's got to do return on investment. Anonymous person here, an investment professional. I think the crux of their question is this potential trade-off between return and sustainability, and some of the opportunities that you have highlighted. And so, are they mutually exclusive? Can they coexist? And this is tying it back to benefiting stakeholders and contributing to solutions. So maybe we'll get you to respond to this question about, does return and sustainable investing, do they work hand in hand?
Yeah, we definitely think so, Nick, and thank you for the question. I think we get asked that a lot. And the truth is you need to look at specific sectors and countries, right? because I think the key to impact investing, as I mentioned earlier, is trying to find models which are mutually reinforcing. Okay, so to give an example through a range of sectors, for example, in healthcare, there are plenty of models that we've invested in that ultimately provide a democratized access, affordable access to good quality healthcare. Whether they do that through, a chain of affordable hospitals in Brazil, for example, where we've invested in one of the largest companies there called Dr. Consulta, all the way to some that are driven by technology. So for example, in India, we've invested in one of the largest omni-channels pharmaceutical platforms that basically has over 6 million customers. And if you look at the demographics of India, where access to drugs and medicines are not getting out to, and you're looking at the ability for technology to democratize access, then you can find that that's where the impact and the scale of the business and therefore profits would go hand in hand, right? You can look at other sectors that include renewable energy and resource efficiency. We have invested in a company in Africa, for example, that provides low-cost solar home systems. They use solar and they use mobile credits to pay down the solar, and that's expanded to almost over 1 million households in Kenya, Uganda, and Tanzania, right? So when you look at some of these models, you can see that you can find that sweet spot between where impact becomes a lens to drive the growth of the business and therefore profitability. And I can go on to name other sectors like sustainable food and agriculture, which is very popular in Singapore and Asia, smart mobility and transportation, and most importantly, transformative and inclusive financing. So lots of these fintech businesses that ultimately try to democratize access to finance in emerging markets are also examples where we think the impact drives the alpha.
Eugenia, interested in your perspective, how do we communicate this to customers, investors, that these two do coexist?
Yeah, I think being able to show them evidence of how portfolios are actually doing with some of these ESG practices and lenses being applied. They're kind of two, looking at the public market side, what we found is that ESG has also been a very good risk management tool, right? And I think if you look increasingly at the world whereby reputational risk, wipes off, I think one study said 500 billion of the top US companies in the stock markets, it's no longer mutually exclusive. I think, that there has been a lot of misconceptions, because if you think about ESG 1.0, that was focused mainly on exclusions, right? So, we like to kind of share that perspective with clients that they might have gotten into it 10 years ago, where it was all about exclusions. It did not perform for them. And therefore, when you speak sometimes to investors, you're starting at a negative base rather than at zero base, right? Because you have to almost help them to get over that negative experience before then they think about looking at it once again. But I think many investors have come around to realizing that it can be a good risk management tool that can help their portfolios be more robust. And then on the more thematic side, as Ern was speaking about, there are good opportunities in certain themes. If we think about climate change, decarbonization, that's not going away. The world is en route to looking at net zero plans, and there are opportunities within that in both the impact investing space and also in public markets.
Thank you for sharing some real life examples there. Let's use this as a stepping stone into what are the career tracks, career paths. There's lots of questions from the audience about this. And I'll take your last point around thematic versus functional, Eugenia. The IBF recently launched 12 new technical skills and competencies specifically for sustainable finance. I know you all are passionate about this and are heavily involved. So we'll spend maybe the next 15 minutes on this area. Salman, let's start with you. What's your role in defining some of the skill sets and mindsets, and what do you look for, please?
Yeah, I think it's first of all, I think that's great, because it really provides a very good overview about what the skill sets are needed within this space, and that's of course across different industries. What we've been looking and we've been working also with other banks it's really to try to define what would be the relevant for the wealth management or private banking industries that we are on. So of course, all those 12 STCs are, as I mentioned, they're very broad, but we can narrow down and we've been narrowing down those ones that are very important for our industries. And then it's to build that curriculum for our front office team, because again, it's the awareness across clients. At the same time, you need to educate your workforce as well, and align on this topic as well. And that's even more important because they are the messenger and they need to actually convey the right message. And I think that's again, it's an initiative with the IBF, and I find that's a very good ground for anyone interested in this space to really look into this STC. And then depending on which industry they are that they're interested in going, there can be some deep dives that they can do for the specific industries. So and again, it's also very helpful for the companies itself to have some guidance in terms of what is the, let's say, the minimum standards or that they should have as a company, and of course across their employees.
Thank you. Practical advice there. En, when you're thinking about recruitment, for example, some specific advice on skill sets, mindsets, please.
Yeah, no, thanks, Nick. No, and agree. I think I should really thank both the IBF and Skills Future for having webinars like this, because it's really important to develop the talent pipeline, particularly in the industry that's only going to grow. So I think well done. And I think, I will start by saying that at least with the TSCs and what MAS is doing, MAS has done a fantastic job in trying to have various work streams over the last few years. Salman and I are definitely part of one together, where we are trying to sort of drive a minimum standard. And I think as these minimum standards get adopted in various industries, that can be banking, insurance, asset management, and so forth, and even the funds industry, there'll be more and more structured jobs that come in because there is a minimum standard. These industry has to embrace them. So there were various roles that come out. And I think I want to allude to something that Eugenia mentioned earlier, and I did make the distinction between the public markets and the private ones. So I can let Eugenia talk more about the public markets, where she mentioned a lot of that data is in companies that are listed. So there's actually a lot of data analytics behind it. So a lot of the roles, particularly ones related to ESG, you need a lot of strong analytical skills to analyze these companies. Whereas I'm going to focus more on the private markets, and that's really more where impact investing has historically grown from, both from the venture capital and the private equity industry. And I think that when you're dealing with the private markets, the data is not readily available. So one of the skill sets is a lot of due diligence with the companies. A lot of my time and the team's time is spent getting to know these companies, these solutions, spending their time on the ground with them, seeing how the solutions implement and how it scales. So that's one type of role there, which is generally as an investor doing that due diligence, bringing the investment opportunities into the investment committee, debating about whether it's the right kind of investment, both from the operational profit and the impact side, and ultimately getting that approved. And once that's approved, as a portfolio manager, you spend a lot of times, as I do with some of our portfolio companies, being on the boards with them. So I spend a lot of time with them on a quarterly basis on the board meetings, and on a weekly basis, sometimes helping them scale into new markets, trying to get the right type of capital, trying to hire the right type of talent, and so forth. And that's essentially the basis of private equity, that value creation that we talked about, right? I would like to say also that within even that industry, as Eugenia alluded to, there are different types of roles. So there are quite a lot of, as impact measurement and management is becoming very important, there are roles within even impact funds, which are not sort of purely investment related. Some of them are measuring the impact thesis and measuring the outcomes of these investments. So these are roles also that we look for from time to time. And, so these are, I guess it's hard to go through all the roles, but I hopefully have given you at least a semblance of what are the types of roles that are coming out, particularly driven by the private markets. I'm sure Eugenia can add to the public markets.
Eugenia?
Yeah, sure. So I guess on the public market side, what we've been seeing has been a lot of focus on the asset managers in terms of building up some of their engagement teams as well, because, to Salman's point, there is a range of strategies out there. And one of the kind of fastest growing areas which we see as an opportunity is that of transition, right? So not just the green funds, but, looking at public companies that are doing good jobs in transitioning to a low carbon economy. And a very big part of the transition mandate is focused on engagement. How can you engage with those companies to make sure that they are going as far as possible? That's something that's coming out quite a bit. I saw a question on kind of risk and compliance and convincing management of that. Interestingly, if I look at Standard Chartered, actually, we've made significant hiring in the environmental and social risk management team. It's a team that sits on the corporate side of things. They go in, they challenge and evaluate companies, and they kind of hold them to some of their decarbonization plans or other plans within the ENS spectrum. So I do think that within the risk and compliance side, that is an area that will continue to grow in addition to the investment side of things. And climate risk and roles within climate risk, I think is one that will become increasingly popular. There are a number of courses that you can be taking. If you're a finance professional, the IBF, they do kind of, I think, give subsidies for the ESG CFA. I think that's a good one to also look at. If you're a risk professional, I think the GAP is a very good program for climate risk. It's one that combines science and something that's very practical around models and assumptions. So I think, have a look at what's out there. And to Ern's point, boarding up on that technical competency and expertise, I think will be critical in getting you in the roles that you want to get into.
Thank you. There's a few questions for people who are interested in making this transition and some practical, really discrete advice. So let's start where, at the beginning, if you were to give advice to yourself, given that you shared how you started in your career journey, Salman, when you look back in your journey, what advice would you give yourself now, please?
That's many, I think, and I don't think we have enough time for that. But I think one of the great experience I had, and I think it's similar to what Anne mentioned in terms of is traveling, I think that there was in Indonesia, and that was really getting kind of your hands dirty with real companies out there, small, that are trying to actually create a business, and they're trying to make an impact as well, either socially or environmentally. And I think that was one of the best years I had, and unfortunately, because of family reason, and I could not stay longer in Indonesia. But that, I think it's if I could go back, and you can see when Anne talks about impact investing or engagement with those companies, and so on. I think it's just one of the most, I think, tangible part of our industry that you can really see, and you can see grow those companies and the impact they're making. So if I can go back, I would actually extend that one much longer than I did in my past.
Thank you for sharing. Anne, what advice would you give yourself, please?
So I think to Salman's point, I think you started by finding about a sector and a country that you're most passionate about, because I think that there's definitely a maturing and deepening of skill sets. So are you passionate about health solutions, education, environment, carbon, climate, electric vehicles, right? Try to find maybe one or two sectors that you're deeply passionate about and where you want to basically apply that. Some people want to focus on Asia, some want to do the US, some want to do Africa, emerging or developed markets. I think having that nexus of trying to understand what you're deeply passionate about and building technical skill sets is really important. And then I think the third point, I definitely go to what Salman mentioned, spend time on the ground looking at solutions, because that can only increase your interest and exposure. And there are different programs out there. LGT, for example, we run a fellowship program. Actually, Salman was one of our stars that did spend time with us in Indonesia. And this fellowship program is a short one that's usually for about a year, where you literally spend time on the ground with our portfolio organizations, hopefully in a sector that really interests you. And I think having that context, then it becomes a lot easier to say, what can I do to solve this challenge, right? And these challenges are complex and they're scaling. So that's probably the advice I'll give my former self. When I applied for a job back then, we didn't have the kind of thinking that we do now. And I take Eugenia's point that all of you on the call, if you're interested in this space, the time is now, because it's the first time that you have increasing jobs. There is definitely that skill gaps that needs to be filled. And Asia is really on the right side of that spectrum. So I'm very excited to have all of you sort of venture in this space.
Thanks, Anne. Eugenia, advice to yourself, please.
Yeah, I guess, you know, Salman, Anne, and I, we've been fortunate to be able to spend time on ground. You know, I spent quite a bit of time in Cambodia and really looking at partnering on building a social enterprise, seeing it from ground up. And I think, you know, that's been helpful if I think about the continuum of capital. But, you know, acknowledging that not everyone might have that luxury, I think one very practical thing that you can do is to just get involved in the organizations that you are in. You know, if there are already sustainable finance teams or teams looking at it, you know, kind of be a champion, volunteer your skill sets and your expertise, because the more you can kind of get familiar with the work that is currently going on, the better you position yourself as well to make that switch. For me, you know, when I was covering kind of more comms and the CSR piece, one of how I fell into this whole impact sustainable finance space was our then head of product. He was very keen on impact investing and we're both passionate about it. So he was going to pitch then to the head of the kind of private bank, you know, to build that proposition. But, you know, that was like 10 years back. It wasn't making money for anyone. And obviously it got shot down, right? Because it's a product head. And they said that basically our boss is like, focus on building the business. But I said, okay, you know, why not I try another angle? So I went to him with the same proposal and I said, hey, great, you know, it's great for our reputation. Let's run this. And, you know, it could be great for a brand build perspective. And somehow he bought the idea and he said, great, you know, why don't you go do your thing, right? And run with it. Well, that was the foray into the space. And, you know, so you get like an inroad in. And you start learning, you start growing in it, and you start building your knowledge. So I would say, you know, just volunteer, be proactive, look out for what's out there, and just stretch yourself. And you might find those opportunities come your way.
Thank you. I think what's consistent there is be really clear on purpose. And I guess this is your authenticity for ourselves as individuals. So get your hands dirty, as Salman put it, get very close to the things that you care about. Eugenia, highlighting the fact that if there's a social purpose, a higher social purpose, actually that could lead to the commercial opportunities. So some very consistent things. Just a yes or no, very quickly. Do you have to go and get international market exposure? Em?
I actually think that now, because of what I mentioned about Asia being this very attractive demographic, the growth of wealth, I actually think it's good to spend time in Asia, because contextualizing solutions is not easy. You know, like at time we spend a lot of time investing globally, but trying to contextualize that for Asia. So I would say that if you're from Asia, you're going to be here for the next couple of years, I think Asia is the focus for you, but I would focus on getting the right sectors and right business models, and whether you want to play on the public side or the private side to sort of directionally plan your career.
Thank you. Salman, do you need international exposure?
I mean, I think as much exposure, it's of course it's always good, right? The more exposure you have and the more diverse exposure you have, and so on. But as I mentioned, I think Asia, it's part of the problem as well, but it's part of the solution as well, right? So here you really got like I think, you know, where you can really make a huge difference as well. So yes, it's good always to have a different type of experience, different view, and so on. But I really think, as I mentioned, Asia does offer great opportunities within this space, which I think the audience should really tackle on.
Yeah, I mean, definitely. I mean, if you have some global exposure, that's helpful. But, as both Salman and Ern have said, the emerging markets region is where the opportunity is at, from both an impact and financial opportunity perspective. But what I would say is it will be helpful to go beyond just the local mindset, given that, Asia is really where the market is at. And I mean, we do speak to some of the entities in Singapore as well. I think the Singapore market is interesting, but it's still quite small. So if you're looking to do and to go a bit further, I would say at least Asia, that would be useful for you.
Thank you. And so as we wind this up, there has been some great questions from our audience. So thank you. I'm going to put you on the spot, our panelists. Are you prepared to take some of the questions that we didn't get to on notice? And we'll ask you to provide some written responses. So are you happy to do that? This is live commitment. So I'll take that as a thank you. So if we didn't get to your question, we will get to it. There's some questions around certification, education pathways. They are one part of the journey, but they're an important part. Education absolutely is an important driver on a personal and professional level, but I think it's also an important driver at a consumer societal level. And so I would encourage everybody to explore the options. Eugenia mentioned GARP, there's CFA as a benchmark, there are others. So I'd encourage you to explore the IBF, generous funding available as a good starting point. So to wrap this up, I'm going to ask for a high conviction statement, 60 seconds, about the outlook, how you see it for sustainable finance. And just the thought to leave our audience with. So Salman, if I could start with you, please. High conviction, 60-second statement. What would you like to leave the audience with?
Yeah, I think for me, it's look, take a job, right? Doesn't matter if it's sustainable or not, make it sustainable, because I really hope and I think we all are here for long term, where I hope the whole industry, every sector, every job, everything will become sustainable. So try and help us on that journey.
Great. Eugenia, high conviction statement.
Yeah, I would say, be the change you want to see in the roles that you're in. I really agree with Salman, right? Whether risk, compliance, financial professional, there's so much you can already do to bring sustainability into your role. So, you can start now without pivoting into another role.
Thank you. And high conviction statement from you, please.
High conviction about Asia. I think we're super well positioned for sustainable investing. I think given the macro outlook, sustainable investing is here to stay and it's only going to thrive. So it presents a very strong career opportunity and one that allows you to align your personal beliefs with the impact that you create, which is something very, very meaningful. So I wish all of you the luck in hopefully finding roles in this amazing sector that three of us already party to.
Well, a sincere, genuine thank you for sharing insights into what you do, your thoughts and outlook for this industry sector. Big thank you to the IBF for putting it all together. And so Florence, we'll hand back to you. And thank you very much for joining us today.